Today we'll know about the pros and cons of personal loans. Personal loan funds can be used for a number of purposes, including debt consolidation and medical expenses. It can be a good solution if you need funds fast. Some lenders can deposit funds into your account as fast as the next business day. Plus, average rates are typically lower than some other forms of debt, like credit cards. But, like all financial products, personal loans have drawbacks as well. For example, some lenders charge high fees, which can greatly increase your borrowing cost. Before you take one out, you should weigh the pros against the cons to determine whether it's the right financing option for you and consider alternatives. Pros and cons of personal loans. As with any other form of debt, there are advantages and disadvantages to be aware of before applying for a personal loan. Here's what you need to know prior to signing on the dotted line. The pros of personal loans. Personal loans can offer benefits over other types of loans. Below are a few advantages of using this type of financing over other options. Number one is one lump sum. Because you get the loan payment all at once, it can be easier to make a large purchase, consolidate debt, or otherwise use the loan all at once. Plus, you'll get a fixed interest rate and predictable monthly payment, making the loan easier to manage. Why this matters? Receiving a lump sum payment with a fixed interest rate can be easier to manage and help you avoid the late payments. Fast funding times. Personal loans generally have fast approval times and payment times, making them useful for emergencies or other situations where you need money quickly. Some personal loan lenders can deposit the loan proceeds to your bank account as soon as the next business day. Why this matters? If you need money fast, a personal loan can be a good financing option. Number 3. No collateral requirement. Unsecured personal loan don't require collateral for you to get approved. This means you don't have to put your car, home or another asset up as a guarantee that you'll repay the funds. If you cannot repay the loan based on the agreed upon terms with your lender, you'll face significant financial and credit consequences. But unlike a secured personal loan, you don't need to worry about losing a home or a car as a direct result. Why this matters? With an unsecured loan, a lender can't take your collateral for failing to repay the loan, at least without a court's permission. Next one is lower interest rates. Personal loans often come with low interest rate than credit cards. As of September 2023, the average personal loan rate is 11.31%, while the average credit card rate is 20.71%. Consumers with excellent credit history can qualify for personal loan rates for around 10.3% to 12.5%. You may also qualify for a higher loan amount than the limit of on the credit card. Next, flexibility and versatility. Some loans can only be used for a certain purpose. For example, purchasing a vehicle is the only way to use the funds if you take out the car loan. Personal loans can be used for many purposes, from consolidating debt to paying medical bills. A personal loan can be a good alternative if you want to finance a major purchase but don't want to be locked into how you use the money. Check with your lender on the approved uses for the loan before applying it. Extending loan terms. Unlike short-term loans like payday loans and other that charge high interest rates, personal loans range from 2 to 10 years depending on the lender. Consequently, you will get a reasonable monthly payment and an ample time to repay what you borrow. Now, let's move to cons of personal loan. Number 1. Interest rates can be higher than alternatives. Interest rates for personal loans are not always the lowest option. This is especially true for borrowers with poor credit who always might pay higher interest rates than credit cards or a secured loan requiring collateral. Number 2. More eligibility requirement. Personal loans can have more strict requirements than other types of funding options. If you have poor credit or short financial history, fewer lenders will be available for you. Furthermore, some lenders don't allow co-signers, which can be used to strengthen your approval odds if you have minimal credit history or your credit score is low. Number 3. Fees and penalties can be high. Personal loans may come with fees and penalties that can drive up the cost of borrowing. Some loans come with originating fees of 1% and 6% of the loan amount. Additional monthly payment. With a personal loan, you add another monthly payment if you are not careful. A personal loan can lead to a long term issues with your budget if it's not accounted for when you take out the loan, and making monthly payment causes you to overdraw your account and send your budget into red.